All right, now for the commodity market update, we see the U.S. Fed made a bumper move yesterday to rein in inflation. Rates up about 75 basis points, larger than expected. And back here in Nigeria, inflation rate for May hit 17.71%. Let's drill down on this and other issues with Longi Dafoe, analyst, financial derivatives company. Great to have you, Longi.
Good morning. Great to be here.
Yeah, so 75 basis points, that was, most analysts were expecting that. But some still, expected that 50 basis points.
Yeah.
But now we're seeing the 75 basis points. Is this the hike that peaks inflation in the U.S.?
Well,
Is this that number?
I'd say it's too early to say.
Right.
But definitely, like you said, it was sort of expected, at least following what happened with U.S. inflation last week. Came in at about 8.6%, highest in the last 40 years or so. And
Getting to that double digits slowly.
Getting to double digits, exactly. And the recent move by the Fed to raise interest rates by 75 basis points, I believe this was the largest single increase by the Fed since 1994, thereabouts. So yeah, it's a very aggressive move from the Fed, and it really shows that inflation is a serious problem that they're really trying to tackle. Yeah.
Right, and we saw the markets actually reacted quite,
Markets actually reacted on X. So what you typically expect when the Fed, when any monetary policy authority raises interest rates is markets should react in the opposite way. So stocks should fall.
Yeah.
But then what we saw actually was stocks rising. So the reason behind this was typically during the Fed meeting, so Fed Chairman Jerome Powell actually signaled that there shouldn't be as much of an aggressive move by the Fed following this 75 basis points hike. So the Fed has signaled that it won't be using much more of an aggressive policy stance. It will still be aggressive, but not as aggressive as analysts and companies had initially priced in. So that's what we're currently seeing the market reacting to, the fact that, okay, going forward, the Fed will not be as aggressive as we had expected. So yeah, markets went up after that.
But we've seen this happen before, the day after, the Fed raises rates maybe by 50 basis points last time. We see the markets react positively, but after, we still see them drop again. We've seen that happen with, the Dow Jones Industrial Average, the NASDAQ, and also Bitcoin, all impacted.
Yeah.
So right now, these stocks are not out of the woods yet. I don't believe they are.
No, this year generally has been pretty bad for investing in general. Stocks are down, like you said, Bitcoin is down. Everywhere is red, to put it mildly. So yeah, they aren't out of the woods yet. And as inflation continues to rise, we are still more than likely going to see. So it's not certain yet whether the Fed might or might not still choose to be more aggressive or not. So that is definitely going to play a factor in the long run in terms of how these stocks perform. Yeah.
Right. And how does this 75 basis point, how does it impact emerging economies? We know borrowing cost, with the loans and all of that, that's gonna be a more of a burden.
Yeah, borrowing costs definitely, and then also the value of the dollar. So once interest rates rise, we will expect the dollar will strengthen as well. And what this will do is it will increase the value of the dollar relative to other currencies. So currencies like the Naira, for example, will weaken against the dollar. And what this will cause is, so the dollar is the currency of the world, essentially. So most commodities are priced in the dollar. So once the dollar increases in value, we will more than likely see the prices of these dollar price commodities increase as well. So consumers holding a foreign currency will find it more expensive to purchase these commodities and so on. And this will, of course, add to issues of imported inflation, the exchange rate pass-through effect, and so on. Yeah.
So that means we can still expect the dollar index run to continue, because
Definitely.
we saw it did hit, a new high last time, but it started pulling back, but we could see it
we will
again.
More than likely see it spike again, especially if the Fed decides to engage in more excessive, aggressive tightening. Yeah.
So looking at that forex market now, what do you think the forex traders are doing right now? Are they stocking up on more dollars, or what are they doing?
I'd say definitely the dollar is king right now. So yeah, looking at the forex market, we can't expect the dollar to continue its bull run through the course of this year. So it's definitely something that we are already seeing. We're already seeing people starting to stock up on dollars. We're already seeing emerging market currencies fall. Look at the Naira. I believe the Japanese yen is also trading at its lowest level against the dollar in years. So yeah, we are seeing it play out in the forex market.
Right, and back here now we see the inflation for May. It's about 17.71, and your forecast was about
17.72. So
17.72.
we were
So
right
you were
on
quite,
the money. Yeah, we were right on the money. So I mean, what is driving inflation in the current right now? So at least similar to what we saw last month. So inflation did increase across both the food and non-food baskets. So of course, what is driving this is, of course, what we're seeing happening globally in terms of commodity price disruptions, supply chain disruptions, and so on. But then most especially, to put in more specific terms, the price of wheat. So wheat has gone up astronomically. And of course, we know wheat is used in manufacturing flour, which is used in bread, which is a staple food. That's what it has typically been affecting the food basket. Then for the non-food basket, the main conspirator there is diesel. So diesel prices are up, about 300% or so in the last year, trading at about 800 naira or so, so astronomically high. Of course, diesel costs factor into almost everything in the country. They factor into generators that businesses use to power. They factor into electricity. They factor into transportation and logistics costs. So the rise that we're seeing in diesel is truly affecting the whole economy. Yeah.
And we have that grim projection there of 1,500 naira per liter. That would be incredible.
It would be very, very, very detrimental, to put it mildly. But I mean, we're not there. So I mean, there might still be hope that we do not get to that point. But then it is definitely something that is on the table.
And I keep asking myself, how do we not get there?
Surefire way boost domestic. We don't have refinery capacity in Nigeria, so that is typically one of the major reasons that has allowed us to become extremely sensitive to international oil price fluctuations, so on, which is of course affecting the price of diesel. The fact that we're continually dependent on the import of these fuel products. So yeah, definitely trying to boost domestic production.
All right, looking at this latest inflation rate now, how do you think this would impact the MPC decision come July?
So one thing that is important to know is that monetary authorities, first off, are more concerned with inflation. So inflation is their priority as opposed to economic growth. So we are more than likely going to see the MPC prioritize fighting off inflation, more than likely to the detriment of economic growth. So it sort of comes down at the end of the day to a balancing act between monetary tightening and economic loosening. So we are more than likely going to see the MPC raise interest rates at its next meeting in order to curtail inflation. And this will be in trend with what we are seeing globally as well. US, as we know, has increased interest rates. UK, the Bank of England has raised rates at 4 of its last consecutive meetings.
And there's an expectation.
There's an expectation of another rate hike as well. Yeah. And even the ECB, European Central Bank, will be raising rates for the first time since 2011 at its next meeting. So yeah, the whole world, the trend is towards monetary tightening, and the MPC will more than likely follow this trend.
What if with all of this tightening, inflation doesn't go down? What next?
Stagflation. It's a pretty mildly, because what we are going to see with the increased tightening is that the economy will more than likely start to slow down. And once you have a situation of a slowing economy and rising inflation, this of course leads to the fear or the concern of stagflation. So we are more than likely going to see stagflation play out if things do not resolve well. Yeah.
Right. And let's look at the oil market now. What's pushing sentiment there at this point?
So sentiment in the oil market right now is actually moving due to issues of tight supply. As we know, supply is still tight. And of course, also increased demand. So prospects of increased demand. We know COVID restrictions in China have sort of been coming down. So this is pushing up demand. So more of a combination of a tight supply and demand. So.
And we saw LNG prices crash unexpectedly, at the export terminal shut down. That made headlines yesterday. Yeah. I saw gas prices actually trending down. What else is, what are your expectations for gas prices?
So, like you
rightfully... We know Putin is, making bank there.
Yeah, they're definitely making bank. So, like you said, the explosion that happened at the Freeport terminal yesterday in Texas has sort of pushed. So the U.S. is one of the largest demanders of gas. So the explosion sort of wiped out about 2% of U.S. gas demand at a go. So the U.S. is currently oversupplied with gas. So that should continue to weigh down gas prices into the near term, I believe for at least the next 90 days before the facility can get back up and running. So yeah, we are more than likely going to see that factor into gas prices into the near term. And of course, the issues currently ongoing between Russia, Ukraine, and of course the whole EU gas and ban things. So those are definitely going to factor into gas prices.
Yeah, the Russia-Ukraine war still stays with us at this point. And I see the prices of cocoa is actually rising. How does that, what's that stoking the price, and how does that impact Nigeria?
So price of cocoa are rising. So we are currently seeing an increased demand for cocoa, and this is good for the country because we are an exporter of cocoa. Cocoa is one of our largest export commodities. So increased demand mainly due to reduction of COVID-19 curves. So as we know, more people are going out, so there's more demand for confectionaries, more demand for cocoa products, and so on. So this is what we're really seeing pushing up the price of cocoa, the sort of build up in demand that we are currently seeing. Yeah.
Right, quite interesting. What else is happening with domestic commodity price movement?
Domestic commodity price movements, I believe we've covered everything. Yeah.
No, that's talking about Gary. I see that rice is actually down. Gary stayed on change. We're seeing tomatoes, pepper, onions, cement actually trending up. At this point, what's pushing sentiment there?
So definitely issues regarding logistics. So as we know, like we've already mentioned, so most of the trucks that deliver goods and supply and make up the supply chain logistics chain across the country are diesel powered. So the fact that we are seeing an increase in these transportation costs are actually factoring into the increase in the prices of these commodities. Also, the planting season effect. As you know, we're right in the middle of the planting season, and this is still sort of affecting the prices of commodities that we're currently seeing. Yeah.
And looking at the equities market yesterday, we saw another major pullback, and the banking sector again was hit hard yesterday. How are you seeing that market?
So I think the main thing there is going to more than likely be what will affect this market going forward is, of course, inflation and interest rates. As we know, once the CBN at its next meeting more than likely raises rates, this should sort of provide a boon to banking industry because they will be able to take advantage of the rate increase to boost their interest income and, of course, their net interest income as well.
But we're still seeing a lot of sell-offs with banking stocks, especially with tier 1 banks.
Yeah, so apart from the boon to interest income and so on, so they are also currently experiencing higher operating costs. So we know banks like First Bank also has decided to close down or reduce the amount of time that some branches stay open just due to excessive diesel costs. So these are higher diesel costs, these are higher operating costs that the banks are currently enduring, are eating into their profit margins and so on. So this is sort of affecting the performance that we're seeing in these banks, and investors are pricing this into their decision whether or not to
and I'm wondering when investors will start taking position, in most of those stocks to see if we'll see some kind of bullish run, at some point. Anyway, Longi, thank you so much. I guess we've covered everything in the commodities market. Well, we'll see you again next week. That was a good one. Thank you so much.
Yeah.
All right, now we'll take a moment. When we come back, Business Morning returns.